Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you've been a subscriber and you are subscribed, I want to give you a virtual high five. I really appreciate your support. If you've been a serial watcher and you're not subscribed yet, consider it. It definitely lets YouTube know that I am providing some type of value or just spewing hot garbage. Anyway, let's look at ticker symbol EAF. This is Graftech Limited or Graftech International Limited. So the stock was recently, well, not recently, but the high was around $6.60. And now it's at $4.30. Let's look at the monthly chart. Ooh, all right. So it's just been heading down and down, kind of in the dumps. Why is that? We're gonna find out together. Ooh, it's coming to a potential. Look at this chart, you guys. Look at that. Um, so it's coming to an apex. I call this the apex, where it's either going to make a move up, boom, 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 or a move down. Now, the fun thing about this chart is we're going to determine if the stock price is undervalued or overvalued. If it is undervalued and the chart is looking like this, I feel like we could be catching a stock at the bottom of the barrel, which is always wonderful if you have a long-term horizon for investing. So let's look at these indicators. The money flow has come back from the dead. Momentum is turning upwards very slowly. RSI is kind of taking a stair step up, down. So if it continues this, we'll probably get to 50 in about 6 months for the RSI. And the relative momentum indicator is still at the bottom of the barrel, which is fine. That's good with me. This is a profitable company, by the way. That's wonderful. It says they're undervalued, and in the future they are also undervalued. However, we do see debt. Debt is not good in the current environment where rates are high. EPS is going down. It looks like it's coming back right here. Sales are continuing to fall. Last year we were at 1.28 billion. This year we're only at 875 million. Why is that? I don't know. We'll see if that trend is gonna continue. Institutions own 96.9%. Let's see if it's more or less. If it's more, then that's a pretty good sign. 102%. Vanguard, BlackRock. We have BlackRock and they decreased 200,000 shares. Vanguard increased 2 million shares. FMR increased about 7 million and a half shares. Grantham added a position of 15 million shares. Wow, 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 wow. Wow. Okay, so wow. First of all, um, let's run our calculations. I mean, these numbers all look good. Earnings per share over the past 5 years, 33%. Sales, 18%. That shows me that this company is resilient. Gross margins are over 31%. That is a growth company type margins over 30%. They're profitable. Institutions own over 100%. Yeah, let's see what this stock price is actually worth. So they make 875 million, 700,000, good for them. They have 128 million dollars, 600,000 in income, good for them. And their market cap is over 1 billion, 130 million, good for them. And they offer a dividend. All right, that looks good. Let's now add the cash and remove the debt. This is the scary part. The more recent cash is 132 million. So plus 132 million, 160,000. Total debt, please don't be in the billions. Please don't be in the billions. Oh, almost. So 923 million, 520,000. Ouch, that's bad. It's not the highest it's ever been. It's actually kind of heading down historically, but that's really high. Total assets, trying to make its way up. It looks like it's trying. Total assets 1.5 billion, total liabilities 1.2 billion. about a $300 million buffer. That's a little scary to me. Um, let's look at their income. Let's, okay, so we have, wow, they're at 50, they had 50% less earnings than they did, or revenue than they did last year. What happened there? Wow, and almost 50% less than the year before that. Wow, they've just been kind of going downhill, honestly, unfortunately. Why? Why? Why are their sales going down? I don't know. We'll look at an article. I just want to see if they're what they're guiding. So now we're going to take this divided by 256,400,000. So the share price should be at $5.23. It's trading at $4.30. So it is undervalued. I think owning at these levels is not bad, but let's see what they're guiding because that's a little scary. Earnings call transcript. Let's see. Let's look. I'm trying to look for guidance. Here we go. So, tons. What does that mean in price, man? They're throwing these numbers, but it doesn't really. Uh, okay. Yeah. Okay, so the decline was primarily reflected the lower sales volume, higher year-over-year costs per metric ton. Okay, let's continue to. Going on down. They completed a private offering of 450 million. Ah, okay. They keep preparing us. Man. So yeah. Q3 is going to be just like Q2, so we should see another lackluster. Let's just go back here really quick. 185. Oh my gosh, it's going to be horrible. That's if we do they're going to do 138 here, 185 here, 185 again. And then they said the fourth quarter should be higher. Uh, Yeah. So that's funny. This person's asking if they've lost market share. Oh gosh. So, okay. So what I think, if you've got a long-term horizon with this stock, I think you could start planting some seeds. Um, I I can have a long-term horizon with this. Um, so they're based appropriately. Their stock price is based appropriately. There is continuing interest. As we can see, the shares outstanding are naturally just dwindling down. Sales are continuing to go down as well. I think I would wait a couple more months on this one. Let's add another line here. I would go. I would wait. Man, it's hard to tell like what pattern is starting to emerge. Like we have maybe like the left shoulder here, the head, and then the right shoulder heading down. And this is the neckline, this bottom line here. Um, if we look, where's the strength? I mean, the strength is low. So there's, I mean, this kind of just looks like it's gonna keep heading lower. Um, yeah, I would wait on this one at least for another few weeks, maybe a month. This could be a good one. I'd want to see if I could get it lower, but we do see quite a bit of demand at the $4. Let's go here. We do see a lot of demand at the $4.15 range. It's acting as support as well, and if it keeps doing this, it's going to break below 415 in my opinion. So again, I would wait a few weeks. Sales continue to decrease. Third quarter is going to be boring. Fourth quarter should pick up maybe 200 million. So that would put their annual sales for 2023 at 360 plus 2, so 560, like 800 million. I mean, yeah. So again, wait a few weeks, wait a couple months on this one. Let's see. This one's worth waiting and seeing if you ask me. Um, and again, if you've got more than a couple year time horizon, this might be good to plant a little seed here and there. If you're messing with $100, maybe put $10 in 1 week, wait another couple weeks, put another $10 in. Slowly dollar cost average if you really, really like this stock. I mean, it's undervalued. Are you bullish on this type of company? Carbon-based solutions worldwide, etc. Steel. So I'll let you guys decide. Insiders are not buying, which is not good. I would like to see some type of confidence from insiders, but that's just me. If you guys made it this far, please consider subscribing, hit the like button, and I'll talk to you soon.